Looks like the consumer is hanging in there. We got a little bit stronger than anticipated growth in the control group, which is what feeds into GDP, up 0.7%. The forecast was for a rise of 0.4, and it had contracted 0.3 the month before. Same story with auto, with the overall headline number up 0.4, 1% last time, so not quite as strong there. But the ex-transportation is up 0.4. That was a negative 0.8 last time. So it does look like the consumer is hanging in there, which is what the Fed was kind of hoping to see. If you're going to do the soft landing scenario, you need the consumer to hang in there, and so far they are. I'll let you give us the market reaction. I'll see what I can find out here about what went up and what went down.
And Lisa, the market reaction is higher yields, and I would suggest it's pretty dramatic over the last 2, 3, 4 days. The set of data has got us out on the 2-year thermometer to 4.04%. So there's a tangible lift here in yields, higher yields. Bill note bond prices lower as well. And again, equities, like Dean Kern had said, somnolent. That would be the fancy word for it.
Well, I'm looking right now a little bit better than expected, but still on a real basis negative. And I think this is really the key question.
Key. Thank you.
That the general trend is lower. So even though better than expected, still on a non-inflation adjusted level, an actual headline retail sales advance month over month is 0.4% versus the expectation of 0.8%. The control group better than that, 0.7%, but still, again, on a real basis, still negative.
And this needs some adjustment. As Michael McKee looks at 85 lines that come out within this report, he'll have that all broken down. Michael McKee, inflation is really a significant dynamic here, isn't it?
Yes, it has been, Tom, and that's one of the reasons we're looking also at the control group, aside from the fact that some of these things are accounted for differently in GDP, but it also takes out gasoline, and gasoline's been a big mover for the retail sales number over the past couple of months because it's been going up and down. It's one reason that we saw a decline last month, and it's a reason that we saw a rise this month in retail sales because gasoline station sales fell on the month by 4%, it looks like. That makes a big difference out there. The other categories that moved significantly, though, were general merchandise stores. And I think what you have here is between the April and May numbers, or April and March numbers, rather, is Easter effect. Easter was early in April this year. So some of the spending that would have taken place in March moves over to April, and you want to average that out. But overall, I think the bottom line that Lisa brought up about inflation still playing a role is there, but you also have to look at the fact that consumers are still spending, and we aren't seeing necessarily any signs of recession in the retail sales figures.